Hello.
How are you?
Good. How are you doing?
Can I?
Yeah.
The what?
The one on the left. The one on the right
Oh,
starts, but it's not getting it. Oh.
oh.
Well, welcome back to QuickBooks. I hope everyone had a good weekend. It was warm, then it got cool last night. So it's supposed to be warm this week and then
Yeah.
cold next week. Funny for October, but that's the way it goes. As long as it doesn't rain on Halloween. We had that happen once. So if you've not done so, please do log into your QuickBooks. And you should get a screen. Something like this. Depending on your login, you may see something. This little person asking you to set up your personalized setup session. So as I mentioned, you can use QuickBooks resources, some free and some paid, to get help. And this is the paid one, but they will give you 1 hour for free. So it's a good chance to kind of see if you're really doing this for sure, for serious, to see how that would work for you and if they're helpful. And what I would do, if you're really going to do it, is come up with a whole list of questions and write them down and get the hour, the maximum in the hour. And then if you like it, you know, keep it going. And it's one of those things you can use as long as you like. You can always stop it. And then if you need it again, turn it back on. So I'm going to close it. By closing it, I won't see it again. So it just means more space for other things. We also have this setup checklist And this is essentially basically what we did at the beginning. And if you ever want to get back to your basic business info, you can go through this. We're not going to do that. I'm going to close the checklist because we're going to do that here. And you'll see the workspace. And this is the one most people keep up on their QuickBooks. So it pops right up to this. And this is the thing I mentioned earlier, why QuickBooks was so popular, because it has all these little circles and arrows and tells you what to do. So like here, and you can see the process. First, you have to add the products and services, then customers. Then you can create estimates, which we're going to do today, send invoices, etc. So that is a handy little device. You will also see that I have some red numbers. So to receive payments, pay bills, and there's even a review transaction down below. What those are for are those are your reminders. So as I mentioned, when we loaded in our vendors, we loaded some with balances, which means we owe some money. So that's what this is saying here. Those little numbers tell you how many are pending, how many need to be taken care of, and then receiving payments from our customers too. So we'll get to that. But first, today we are going to go and set up our sales tax. So if you're using an older data file of QuickBooks, like from the beginning class, you may have already set this up. But because I started fresh, I have to do this again. And it's a good chance to review this. Because as a reminder, you only have to charge sales tax on items that are in your state taxable. And in California, things like foods, fruits are not taxable. But we are going to collect a sales tax. You can do this manually, or you can use QuickBooks's automatic sales tax. That's the way to go. So I'm going to click on that. The reason that's the way to go is taxes change. And in fact, on our ballot where I live on November 8th, there is going to be another tax. It's a property tax, not a sales tax. Oh, pardon me. No. There is a sales tax, a 0.5%. And of course, it's fire, police, and children. And all the advertisements are out, and they're trying to get you to add it. So if you vote to add it, then your sales tax for your purchases goes up. So they had that one before. What happens is whenever they lose, they just wait and try it again. Take a couple of years, but it went down last time because the economy was kind of tough. And now it'll be interesting to see because it's pretty tough now. So the way QuickBooks calculates your sales tax is based on your address. I'm just going to make it up. 123 Elm Street, Patterson, California, 95301. Oh, no, sorry, 95336. So the big ones are the state and the city, because the city also determines what county you're in. So when I click next, because I put in California, it's going to come up like this. And you're going to see the question, do you need to collect sales taxes outside of California? And if you remember from the beginning class, if you have a location in different states, then you are supposed to collect sales taxes from those sales in those states. So we're not going to, we're saying no. Okay. If you said yes, then you would just input the states, and then QuickBooks would look up the agencies for you. So you'll see here, it did that for my one state, California. And that's going to be my tax agency. So I'm going to click next. All right. So it should say all set up. And what it's doing now is keeping track of how much you need to collect in sales tax for each of your sales on taxable items. So the next thing we're going to do now is create an invoice. You don't have to do this. You could just close this out if you didn't want to do it at this point. So if you're doing this for another company, you'll see they got the close box in the upper right-hand corner. You're always welcome to just close it and then work on something else. But we'll go ahead and follow through with create invoice. If you didn't have to set that up, go ahead and just go to the new invoice screen, create invoice. So I'm going to pick any customer from my drop list up here. Even if they owe me money, it's okay. I'm going to extend them credit until I get a chance to get them all caught up. When we did our invoices before, we started from the customer list. So if you remember from the beginning class, we started there from the customer, select the customer, create invoice. We're just going to start off with a blank invoice this way. So I'm going to pick Allie. So this is the other way to create an invoice. And both of them are completely legit. This one happens to not have a billing address. So when that happens, you can type it in here. Oh, here she did come. I'm sorry. I was just too fast on the draw here. My computer's too slow. But let me get her back here. So when I bring her back, as I switched over, it's going to carry over her address. If you need to make a change in the address, you can change it at the invoice level here. Okay, there she comes. So I can make any changes. Like if I want to add the word street. So you can do it on the fly, which is kind of good. Here's what's critical though. On the right side, you should see this location of sale. And you think, oh, of course, what do you mean location of sale? That's my business. Well, that's what determines the sales tax, is where did the sale take place? So if you had a Modesto shop and a Patterson shop, it would make a difference because Modesto has a little different sales tax than Patterson. If you're in a different county, a different state, then that does make a difference. The location of the sale is basically where are you when you collect it. Now, we're mailing this invoice, right? So she could be in Canada. Okay, that's fair enough. Then you mark the location of sale, though, is still under your jurisdiction, but it will recognize that she's living in a jurisdiction that you don't have a company in, so it won't charge her sales tax. All right, so that comes up automatically, or it should. And then I'm going to come here to product or service. So when I click on this little drop-down arrow, there are all my products. So whenever you need to add a new product, you can go to your products list, click new, add it, and you're done. We're going to do it on the fly at the invoice level. So you'll see this at the top, add new. So just to be a little bit more advanced now, we're going to add a product from the invoice and then sell it. So we'll make this an inventory part. Remember, inventory is going to have the computer track how many we have, how many we sell, and how many we buy. And I'm going to call this my business book. So I am so successful. I wrote a book on how to create a business. I left it in my shop, and we're going to sell it. So whatever you normally sell, this is kind of an extra thing. You'll see there's SKU for stock keeping unit. You could put one in here or leave it blank. We didn't set up categories, so we're going to leave that for now. But something like this, where you're kind of doing things that are not your normal sales, you might want to set up a category for that at some point. And we're going to leave class blank, but you'll notice from the beginning class, this is new. So you can classify your products and your locations too. I might sell it at one location and not the other. I'm going to go ahead and input a quantity on hand, say 10, as of today's date. Okay. The reorder point, make it 5. Remember, the reorder point is how low your inventory will go before it reminds you, hey, time to place an order. Next, you're going to see the things that come up automatically. There's inventory asset account. That's an automatic, and that's correct. Usually, you're going to leave it that way. And that's going to tell the computer, when we have these things on hand, this is the account that's going to hold it for it, hold the value. So we'll know how much value we have in the books that we've already got on hand. Description is going to be easy manual on how to start a business. Okay. Remember, the first description is what your customers see. So the sales price is going to be $19.95 because everything has to be 95 cents. There is a theory that $19.95 is not 20. And so if somebody's afraid of spending $20, they're more likely to go ahead and spend $19.95, even though it's only a nickel less, which I don't know if that's true. Because when I see $19.95, I think 20. Even at the gas station, you know, if the gas is $6.95 and 9/10 per gallon, I always think $6.96 because I know I have to pay it. But there is a whole psychology into pricing. Again, now there's going to be another account here, and this is the income account, meaning whenever you sell the book, where's the money going to be tracked? And it's going to be tracked in sales of product income, right? So we have an inventory account tracking the ones we have not yet sold yet, and income account tracking the ones as they sell. And now because we turn the sales tax on, you will see here, we have the sales tax rate. Now it gives you this warning that each item can have special sales tax considerations. So sometimes, depending on the type of item, it could be something that maybe is only taxed for certain reasons. But ours are going to be generally taxed. Well, I am going to click on Edit Sales Tax just so I can see what it's doing. So up here, you can actually tell it what kind of product it is, and if there are any exemptions to your sales tax, it'll put it in here. This is something that's relatively new for QuickBooks, and it's really handy if you are dealing with things that may or may not be taxable. It just gives you a little bit more advice here. Because the deal is, if you do collect sales tax on an item you weren't supposed to, you still have to send it to the state. They still want their money. And then you can see how you can override the taxability of the item by saying it's non-taxable. The only problem is if you mark something that's not taxable and it turns out it is taxable, that it's a mistake, then you have to pay the sales tax anyway to the state. So down below it says you're currently charging the default sales tax. I'm going to show more. So it says, the tax rules you've set up will apply every time you add this product or service. So every time we use it on an invoice, it's going to automatically turn on the sales tax. So we're done with that. And next we have our purchasing information. This is how our vendors are going to see the book. So I'm going to call it my self-published self-help book, right? So this is how the vendors see it. You notice there's a difference again between the easy manual on how to start a business and self-published self-help book. You can have the descriptions be the same as long as your vendors do expect them to be the same. The cost is going to be $8.50 a copy. So if we subtract that from the $19.95 we're charging, not including sales tax, you'll see we're earning $11.45 on each sale. And then again, we've got the COGS account, the cost of goods sold. It comes up automatically. That's going to keep track of the expense account. When we buy stuff, it will be tagged under that account. And this time we are going to use a preferred vendor. So go ahead and pick a list. And I'm going to use Wholesale Warehouse. So if you imported your list, you should see Wholesale Warehouse. If you didn't, you can pick anybody. What this is going to do is allow us that when we purchase it, we can automatically have our purchasing come from this one vendor. So from the beginning class, it was not required. It's still not required. We're just going to do it to make life a little easier and learn a new shortcut. So I'm going to save and close. And you should get a little notice, inventory business book saved. And here it comes. When I click in the quantity, they're going to buy 1. But I now have those 10 on hand that I told it I already had in my original inventory. So this little black note pops up. That's handy. You'll also see that class, or pardon me, the tax is checked. So it's automatically doing the sales tax here for us. Now, if I look below, it says it's doing it, but you don't see any numbers here. The reason is I'm not finished. I could be typing 1, or maybe I'm typing 10. So the computer's waiting for me to get out of this box here, which I'm going to do by hitting the tab key, or if you just click on the rate and tab down to the next item. And then I'm going to click on message on invoice, and ta-da, there's the tax. So yes, I kept it under $20, but of course, our sales tax, being $157, puts it slightly over. And if you want to see what QuickBooks did, you'll see the math. I could click on that. And there's how it figured out and calculated that amount. You'll see the state sales tax is only 6.25%, but our county has added 2 more taxes. And Atwater, if they pass the tax, then we'll see another one. It'll be a city tax, and they can do that. Cities can pass sales taxes, counties can, and the state can. So like in Los Angeles, if you buy something in Los Angeles, the city, you pay the city tax, the county tax, and the state tax. So yeah, everything's more expensive there just because of that. But that's the pleasure of living in Los Angeles. So it does, it gets more expensive. And then vendors in those areas say it's not fair because it jacks their prices up, right? And scares their customers away. And really, if you're close, Los Angeles is so big, it's kind of harder to do. But if you live close on the border of Los Angeles to another county, say San Diego or something, and you need to buy a book, well, why buy it there? Go do all the shopping in San Diego, man. If they don't have the tax, then it's cheaper than you drive home because it makes a difference on where the sales takes place. So that happens a lot. There are ways of working around the sales tax. Now, in this case, it's 0.625%. That's not a whole lot, 1%. So it's like, do you really want to drive? And then, of course, now pay the gas to get there. But I think I mentioned this before, like in Stanislaus County, one of these, I think it's the 0.625%, is the tax for libraries. It doesn't say it here, but it keeps the libraries open and it's funding the libraries. So for a long time in Stanislaus County, the libraries didn't have enough money. And they're always having to go back and ask the county for more money. And so the county said, well, we'll try this little sales tax for you. And then all the money goes to the library. So everybody's paying for the library. Make sure you go and check out a book and get your money's worth. This, the tax isn't permanent, so it comes up like every 2 or 3 years. But the way they've designed it, it comes up in the summer. It's on the June ballot when nothing else is happening. No president's run in June. You know, they don't get an election in June. The governor isn't reelected in June. It's always November. So a lot of times it's by itself. And because it's such a small item, there's only one item, they usually do it as a mail-in only ballot. And it's kind of clever because the people who really care about the libraries will mail in their ballots with a big yes. And everybody else won't even bother to read it. They'll say, oh, I don't know what this is, and throw it away. So I'll probably have that one for a long time. If you needed to manually edit your tax rates here, you can again do it here and override whatever the computer's doing. So you always have the chance to override. I'm just going to close that. It's correct. And there's the balance due, $21.52. So down at the bottom where it says save and send, I'm going to tell it save and close. And then since we started this by setting up the sales tax, it is going to ask a couple of things here. So just as before, the sale, depending on how large your business is and how much sales tax you're drawing in, you either pay this every month, every quarter, which is every 3 months, or annually. You'll see down below how much money you have to make. So if you are $100 to $1,200, you pay every quarter, right? If you're $1,201 and more, you pay quarterly prepaid. The difference between quarterly and quarterly prepaid is quarterly you pay at the end of the quarter, quarterly prepaid you pay in advance. Meaning you got to guess. You got to guess how much sales tax you're going to collect. If you're wrong and you guess low, they will charge you interest on guessing wrong and paying the rest. If you guess high, then they get a refund or a credit that you can use. So that's the difference between those two. Most companies do quarterly prepaid. I'm going to turn this to monthly. We'll start it in January and I'll click save. Now, normally you probably just do quarterly and quarterly prepaid. But here we go. All right, so now when we click on our sales tax in the navigator here, you can see how much we've collected. You see I have a bunch of overdues. The reason is I said starting in January. So if we were doing this for real, I really would have said October, because that's when we really started, right? Even if your amount is 0, you're going to notice you still have to file. So let's say you took the month off, right? No sales. All right, that's okay. The answer is 0. How much money did you draw in sales tax? 0. And you still have to file it. If not, they come, well, they don't knock on your door. They send you a nice little letter. It says, you know, we miss you so much and you missed filing your form and please do it right away. Otherwise, we're going to get you. And they get you by filing or charging a penalty and then interest if you did earn something. You'll see we have one coming up down here in October. Now I only have one transaction. When we imported our transactions, they did have some sales. I'm going to click on View Tax Return, and this is for last month. So this one, we have until the 20th. So we got 3 days to pay it. Of course, it's 0. And then let's take a look at the one that's upcoming. So I'm going to view tax return. And there's the sale I just made. Right, so we owe them $1.57. Now you might say, well, when you imported those numbers where we had customers that owed us money, how come those aren't showing up? This is one of the problems with just importing, is it showed they owed the money, but QuickBooks is assuming whatever sales taxes were already taken care of on those sales. So if that's correct, good. In our case, we're going to assume that's correct. But just so you know that if you ever are importing transactions, keep that in mind. Like, just ask the question: were the sales taxes paid on those purchases? If they've already been taken care of, these zeros we had. QuickBooks might show these as zeros, but your other program or whatever else you were doing may have taken care of it. Okay, so just that's how it's going to work. And let's take a look now at our chart of accounts. I'll click on the cog on the wheel. And go to chart of accounts. So as I scroll down, before I scroll down, there are the ones we set up last week: the checking account, petty cash, and savings. Down below, under our liabilities, you're going to see this new one. And there it is, $1.57 I just collected. So I'm going to click on View Register. And there we go. Now, we did one transaction, right? One invoice, but it shows up 3 times, right? What happened? Well, there are 3 different taxes we're paying. We're not just paying that one, because remember we saw the breakdown. So what happens is QuickBooks keeps track of those separately. And so when it reports to the state, it's going to report how much in each of those categories we collected. So that's why it's showing them as 3 separate transactions. If you looked at the journal, you would see them as 3 different transactions, even though it's technically 1. So we looked on the invoice, we saw 1, but here you'll see 3. So every time we collect taxes in California, there's 3. Like I said, if you're in Los Angeles, it could be 4. And depending on the county and city you live in, it could be more. Just depends on what they've done. The good news is you don't have to pay the different jurisdictions or the different taxes. You pay one amount to the state with this report, and they turn around and distribute out to the different counties and cities for you. So that's the good news. Let me go back to the chart of accounts. And let's go back to the advanced checking account. I'm going to view that register. So when we were looking at reports last week, sometimes people say, well, if I want to know how much I had in my accounts, why would I bother with a report? We're only using the checking account and maybe the savings. So I could just look at those 2, right? So I can see here, look, right now my balance on my checking account is $8,250. So that's how much I've got. This doesn't show liabilities, meaning you got $8,250, but now we have some sales tax we have to pay eventually. So let's go back over here to the main menus, to the business overview. And we're going to look at reports. There it comes. And under reports, when it gets around to showing me my reports, I'm going to call it the profit and loss. So the profit and loss is kind of like a combination of all your accounts, your bank accounts. So you can see there, okay. So it looks like you've got net income, 13,000. And go back to reports. And this time I'm going to click on the balance sheet. This one includes liabilities. See that right here, including our sales tax. Right? So that's why business owners will ask for this report a lot. They don't want to see the checking account because it's great, but it doesn't tell them liabilities. Liabilities are things you owe that have not yet been paid, but you definitely are going to have to pay them. Okay? So this way, you can see what the sales tax is. Now, if we're selling things that had a low margin and a high sales tax, then it's going to look like you got a lot of money, but a lot of that money is going to go to the state for sales tax. So this bottom line here on your balance sheet will give you the legitimate bottom line. 25,241 is what I have in equity and liabilities. And that includes all the assets I currently have on hand. Remember we set up the book inventory asset? So here's how much I have on hand in value. See how that works? So, the checking account's good news, but the liabilities are the bad news. Yes, we have all that money, but of that, when you look at the balance sheet, you can see how much you're going to have to pay out. So right now I have liabilities of $1,186.06. So if you're going to sell your business, they'll want to look at this and they'll want to see, how much do you owe? How much do you owe in sales taxes? How much do you owe in other things? So like in this case, because I imported my vendors with some balances, they're going to show up here as a liability. Basically, anybody you need to pay at some point in time is going to show up as a liability. If you have loans, you're paying off a loan, a business loan, that's going to show up as a liability too. On the other hand, if you want to buy a business, this is definitely the report to ask for. So like when Elon Musk wants to buy Twitter, he said he would do it without any kind of, no questions asked. Crazy. Then he regretted it because, he did start asking questions and then he found out it wasn't as good a deal as he thought. Oops. So any questions on what we just did on how we set up the balance sheet and where these numbers come from and the liabilities for the state sales tax? Okay. I'm going to go back to get paid and pay. So from now on, as we add in our items, it will automatically charge sales tax. I'm going to go to the company pin I added last week. I'm going to click on edit. And you'll see now it's showing up as sales tax, as taxable. All right, so even though we didn't have sales tax turned on when we added this, it's now going to be taxable. Let's go up to our customers. Let's pick another customer. I'm going to pick one that doesn't owe me money. Dusty wins. I'm going to create invoice. If you want to use one that does owe you money, so you'll see Doug Holes, it says receive payment. I can use the drop-down list and I can still create invoice. But this one, I just want to spread it around a bit. Okay. So the product is going to be the business book again.
It's like creating those.
Yes, create invoice. Should look like with your customers. So like in this case, see I've got that one. Oops. But even if I want to pick, let's say Allie again, I can use the pick list and you'll see down here, the third one down, create invoice. So, and like I said, you can pick anybody. I just picked this one because it was easy. And because this one doesn't have a balance, so I'm trying to spread out my balances. And because I think Allie has an old invoice and we're going to charge a late fee. So I want to keep this separate. So there's Dusty. I'm going to go down. Business book. And then underneath this, I'm going to do the company pen. And you'll see that now the sales tax is automatically charged and automatically put there. And once again, you can override it if you need to, but that's the way it's going to work from now on. Where it services are not taxed with sales tax, so that's something that's exempt. However, if you're, let's say you're a window painter and you charge for labor, but you also charge for the products that you use, so the paints and the paintbrushes, and they get to keep them in case they want to do touch-ups or something, then you are basically reselling those, then you do charge sales tax. If it's all under one flat fee where you're not reselling them, then you're going to pay the sales tax and then you're going to keep them or do whatever you want with them. So that's where there's certain circumstances that the same thing for different customers can be taxed differently. But we'll keep it simple. All right, so I've got two items here down below. You'll see the sales tax all calculated. And I'll save and close. And once again, because last time when I did an invoice a few minutes ago, I changed it to save and close. QuickBooks remembered what I did. And now I have save and close automatically. If it still shows as save and send, you can still override it and do save and close. And now Dusty owes me money. And Dusty owes the state through me. You could have a customer try to tell you they're not taxable for whatever reason. Like they're going to be a reseller. They're not going to use the items for themselves. They need to prove it. Okay. That doesn't happen very often. Okay, so it's 6:52, it's break time. We'll come back. 7:02. We're gonna do some estimates. I'm going to, we have a request to review the sales tax procedure again, so I'm gonna do it again. So whenever you want to access the sales tax on your navigator, you got the area over here that says taxes. So the first time you set it up, you will see a little different window. But once it's established, this is how it's going to look. To simulate the way it used to look, I'm going to click on sales tax settings. And this is my tax agency. So we set it up monthly. We said the start date's going to be January 1st. And then when you edit, it actually asks you the reporting method to be accrual or cash. We're going to use accrual. So that should be automatic. I'm going to click back to Sales Tax Center. Let me try something. Now, it's going to try to delete it. So if it would trigger that first screen again, I can only make it inactive. Yeah. I don't think it's going to let me do it because it's the only one I have. So I'm going to make it active again. Okay, so this is the sales tax. And then once you have it turned on, you should be able to go to your customers and leads. And then pick a customer, any customer. And then create an invoice. So as you select the products here under products and services, like I did the business book, you should see this column. If you don't see this column, tax, with a green check mark, it means the sales tax is not set up correctly. So that's why it won't show up if you don't see it. But once you do see it, you should be all good. And then I'm going to click over here where it says message on invoice. Not that I want to use it, but I want it to do the sales tax calculation. And I get a little wait, and then some numbers should change here. So that's good. It's charging a sales tax. Then I said, let's see the math, because I never trust QuickBooks completely. I want to make sure I know why it's doing what it's doing. So where did it come up with that number? this is why. There are 3 different types of sales tax we're collecting for a total rate of 7.875. One's the state, and the other 2 are county. So this will show up on any invoice when you click on it. I'm not going to bother with it because I'm going to trust QuickBooks enough. And they're pretty good. I haven't heard anybody's had any problems with like this calculation being wrong. I'm sure it's possible, which is pretty amazing, throughout the country, and I think now throughout the world, they know all their jurisdictions. But on the other hand, governments are very happy to help QuickBooks any way they can to make sure they collect this money. So then I went to save and close. It recorded it. And I wanted to see it. So I went up to this little cog, the wheel up here. Chart of accounts. And then, as you recall, the chart of accounts is listed by type alphabetically. So there's bank, and then assets. Actually, that's not right. It's alphabetically by name, and then by type there. So that's advanced checking. I want to scroll down here till I see California Department of Tax. It's this one. I say I want to view my register, see how much I owe and why I owe it. And now I have 3 transactions. So each transaction gets its own line. And then because it was broken down to 3 different percentages, you'll see each invoice, even though it's for one product, shows 3 lines. And this might be one that I say, you know what? That's a lot of lines there. I think I'll condense it. Because each little entry gets 2 lines. I'm going to change this one to show in 1 line only. So my checking account, I might want to keep 2 lines, but this one, because there's so many, I see each number is on a separate line. And as just an aside, that is something you can do. You can change your accounts. Each account can be either 2 lines or 1 line. You're not committed to 1 line for everything or 2 lines for everything. And the computer will remember it. So over the weekend, we went to my son's house, and my 4-year-old granddaughter couldn't wait to show me something in her refrigerator. So she opens up the refrigerator and she pulls out this big canister of grated Parmesan cheese.
Oh.
The reason she does that is whenever we order pizza, she likes little cheese packets. In fact, she'd rather eat the cheese packets plain with a spoon than pizza itself. And so I would set her up with a little spoon and everything, because I do too. When I was growing up, I was telling my mom, I used to love that. And just that salty thing. And I still do. I mean, I still have that little bug for it. So, so she was all impressed, and she, she's little. So she was holding this canister, and it was a lot bigger than she is. And I told her, how are you going to eat all that? But kids just find the stuff they like and they stick with it. All right, so we're back. Let's take a look at our sales tax one more time. So I'm going to go into taxes on the left-hand side. Sales tax. You'll also see, by the way, income tax and 1099 filings. And I don't know if you watched the news over the weekend, but a lot of companies are having now changed their 1099s. There was a new law or a new rule passed, a federal rule, that's making a lot of 1099 contractors employees. And they're basically following California. California has like this four questions. If you answer them yes, they're an employee. And so now they're making a lot of they call it the gig economy employees. So Uber says won't bother them because it doesn't count. We'll see. We'll see if they go after them. And then some of the others. But that's the problem now, is some of places are having to say, okay, they're no longer they're no longer contractors. We have to make them employees, or we have to let them go, not use them anymore, because it's pretty expensive to change them into employees. So it'll be a mess. And that's one of those things you kind of have to keep up with in those rules. But you can see right here, as of this weekend, this could have completely changed for your company depending on how much you were using those. Okay, I'm going to use sales tax settings here. And you'll see, here's the California Department of Tax and the setup. We set up as of January. And you'll also see the reporting method is accrual. Let's go into that. We're going to edit by clicking over here under Action, Edit. So remember I said I was going to do it monthly. I'm going to pay this monthly. And then here is where it says accrual. And the other option would have been cash basis. So there's accrual or cash. When we set up our company file, we told QuickBooks to keep track of things by accrual. Usually, states and cities will want the accrual method. The difference is, as you may recall, if it's cash basis, you only have to pay the state on the cash you received, right? Meaning, if you got a customer who paid, as soon as they pay it, okay, now you're going to pay that to the state. Accrual means, for you, it's worse, that as soon as you send out the invoice, those 2 invoices I created, I now owe that sales tax in October. Well, they're not going to pay, let's say they take their 30 days, they're not going to pay till November. Well, it doesn't matter. I accrued it in October, so I pay it. Now, QuickBooks, when they do pay it in November, hopefully, it will balance it out. I say, okay, they paid it, so we're going to take that off, balance it out, and then you're not paying it double. But it'll keep track of it for you. They like that accrual method. Business owners don't like it, because what if the customer doesn't pay? What if you have to write off that invoice? Basically, you try to get them to pay, it's been 3 months, they won't pay it, you write it off. Well, then you have to go back and deduct for that payment you already made back in October when it's now January or so. So that can happen. QuickBooks will help you with that, but that's why all the agencies like the accrual method, because there's no guarantees except in your government agency. Then you're guaranteed the business is going to have to pay it. Okay, one thing I can do is remember all my delinquent forms. Let's say instead of January, I'm going to change this to October 1st. Now, we weren't really, our class didn't start October 1st. So you could actually put the date, but it doesn't matter. If you start one day in October, you got to file an October form. So I'm going to click on save. And now when I click back to Sales Tax Center in the upper left-hand corner, I didn't do what I thought I was going to do. I thought it would wipe these all out. So you only get one shot at it. See all my delinquents? Oh, wait a minute. I don't know if you recall in the beginning class, I always said, whenever it doesn't do something you expected, hit the refresh button. So I'm going to hit refresh. My refresh button, because I'm using the Firefox browser, is the upper left-hand corner here. It's a circle with an arrow on it. And that just basically means redo the screen, bring all the fresh information in. And let's see how that does. Nope. However, I can limit what I see here. You'll see the tax period date. If I just want to see the current ones, I'll say this month. And now I only have one, the one that's going to be pending. So because this says this month, it's only going to show me the current month. Any questions on that? If you're in the real world and you do see, let's say you get hired to do QuickBooks, this is one of the first things to check, by the way. Go straight to taxes, and I'm going to go up here. Click on sales tax again, and look at the filings. And make sure you don't see a bunch of these. Because this is one of those things that QuickBooks will remind you, but you still have to do it. And you're either cutting them a check, or now they all want it electronically. The state likes it electronically. So that's, if you're starting a new QuickBooks job, they say, oh, welcome to QuickBooks. The other person left. And we'd like you to pick up where they left off. Check this out. If you see these, oops, time to do some backfiling, because you want to get these done right away. The longer you wait, the more interest you pay. Like I said, they're not very patient. Sometimes the state, they have problems in generating payments. They don't give you interest. But if you're late, definitely interest. All right, so let's now go to our customers. We're gonna do something a little different with our customers. So I'll use customers and leads, or you can use get paid and pay, either one. They both have the customer list. We're going to start using estimates. So if I want to use get paid and pay, you'll say I have the option here of doing estimates. So I click on that. Or the other option is just under the customer, you can create an estimate. But for our first one, you'll see this screen. Again, this only appears the very first time you create an estimate. What an estimate is, it's for a company. Not every company needs to do estimates, but let's say you're a trucking company and you want to ship somebody's goods on their behalf from Patterson to New York City. So you're going to make an estimate of what the cost would be, right? Or if you're a construction company and they want you to build a fence on their house, your customer needs a new fence. So you say, all right, here's how much the materials are going to be. Here's how much our labor is. Here's how long it's going to take. Then they can decide if they want to do it or not. So let's go ahead, even though that your business is retail, let's just create an estimate. The other thing you can use estimates for, even if you are a retail business, is let's say one of the local county agencies needs supplies for something. If it's over a certain amount, the county is required to do what they say is go out to bid, meaning they have to ask vendors and put it up online. Now, that's the way they advertise it. That, all right, we need 300 teddy bears. Who can provide us 300 teddy bears? So you're going to create a bid for that, and you can use this estimate system to do that. And the idea is the bidders compete against each other. They don't know what the other bidders are going to bid on and how much they're going to charge. So everybody's going to try to do the lowest price they can. And then we'll look at it, and hopefully we get the best price. It doesn't always work that way. The county isn't required to use price as the only reason. If you're a brand new vendor and you just started, I started my company a week ago, they might say, you have the best price, but you don't have any experience. So we don't know that you could deliver. So we're going to go with somebody who's more expensive, but they've been here for 30 years, something like that. So that's the kind of thing that can happen. I'm going to pick a customer. While I'm here, you notice I got the add new. Remember we did the add new for our product? Let's do a new customer while we're at it. So rather than go to customers, click the new button. I'm just going to click on add new here. So we're essentially creating a new customer entry on the fly. And this could be that the boss says, hey, we got a new customer here. Go ahead and create an estimate. You're not sure if they're on the list, but when you look on the list, you don't see them. So you could just click on, okay, I'll put them in as a new customer, add new. So she'll be Mary Johnson. She can have a company name if she is part of a company, but I'm going to leave all that. You'll notice again, we have is a sub-customer. We'll get into that. So you can have customers who are under the umbrella of a bigger customer, like a corporation, but we're not going to do that right now. She's just going to be an individual. And I'll make up an address, 123 Oak Street. Patterson, California. Now, for the class purposes, the reason I'm adding a new one is I want this one to be clean with no history. So when we look at her history, you'll see her history starts off with estimates. And I'll click save. And there she is. And now, whenever I look at the list, she'll be on the list. Okay. So the way this starts is here's the date of the estimate, which is today's date. You can post date it. Like let's say you're working on this evening, so she's not going to get it till tomorrow. You can make it the 18th or any day you like. The expiration date is a date you put on there on your estimate to say, here's the price we can give you, but it's only good for say 2 weeks. The reason you do that is, as you've seen, prices go up, right? You go to the store one day, you go back, say, oh, I'm gonna get some more of that. And what happened? It went up 2 cents, If you're in a competitive bid, a competitive estimate, that 2 cents difference might have been your profit. Now, if they accept it, you won't get a profit. So you put a date in here. So we'll just say November 1st. but it can be as long as you want. If you want to make it a year, you can do that. I was just going to say, if it's labor, you know your labor costs. Actually, labor costs are going through the roof too, because everybody wants a raise. It's hard to get employees, so you're giving them more money to come in, which means you have to adjust your estimate. So, yeah, things are up in the air. So that'll just tell them and the computer, here's how long they have to respond. If they don't respond by November 1st, they're out. It's no longer valid. That doesn't mean you can't honor it, you can't change the date, or you can't just accept it if they say on November 2nd, you know what, we want to go with this. You say, okay, we'll give it an extra day there, that's fine. So you're allowed to override that anytime you like. Our estimate number is 1001. You can change that to any number and it'll start the counting at that point. Again, just like an invoice, you'll see over here, there's department, location of sale. We even have our tags. So it really looks just like an invoice. The only difference is when you go to the accounting, it's not actually going to start accounting until the estimate's been accepted and you start invoicing. So what that means is all the amount of money we're about to put in doesn't become real to the computer until they accept the invoice or they accept the estimate and you do the invoice. So let's come up with some products here. Let's say they're going to buy some baseball caps. Say 10 each. And then the rate is $20 each, so the total amount is $200. You'll notice tax didn't come up on this one, so I have to click on it to add it. All right, so that's what I'm saying. I will provide you 10 baseball caps at $20 a piece. That's a total of $200. Underneath that, I'm going to go to line number 2, and I'll pick another item. And business books. Now, it'll still tell you how many you have on hand, but by the time they accept this estimate, this may not be true. So with estimates, you can use this as a guide, like, oh, you know, I've got 7. I might want to reorder some if this estimate comes around, and if they accept it. We'll say 8 at $19.95. And there we go. So the good news is this works just like an invoice. And you'll see here the totals on the right side. Let's calculate it all up. So we're saying the estimate we're providing is if you pay us $215.75, we'll give you 10 baseball caps and 8 books. Again, just like an invoice, if you want to, you can add notes to the side here. So the first box is what the customer is going to see. The box below is what they'll see on a statement later on. They might say, well, why would you worry about a statement if it's just an estimate? Here's what's going to happen. When you do the invoice, it's going to suck all this information up and carry it over for you. So if you put it in now, you don't have to worry about putting it in later. I will put a note on the estimate though. I'll say, thank you for considering our offer. And then the other box you have down below is attachments. So if you had photos of something, or you had, let's say they sent you a letter requesting an estimate or something like that, you can attach the file here. You basically scan the paper letter, or if it's an email, take a snapshot, add it here just as a little historical record, but it's not required. Down below, just like with our invoices, you'll see there's cancel, change your mind on the whole thing. If you just want to clear out the invoice and start again, you can do that. Then you're going to see printer preview, and you can see what it's going to look like on a printer. And then you have make recurring. So there are times when you might want to have the same estimate pop up every month. And it could be, again, a government agency, or it could be a company that says every month we need an estimate. 99% of the time we're going to go with you, but we still need to have it for our records. So you give us an estimate, we accept it, done, right? So you can set up to automatically generate this on the first of each month from this point forward. That way you don't have to keep coming in every month. Remember to do this. As a general rule, you can't, when they're asking for an estimate, they can't buy it until they get the estimate first. So that's why you want to make sure you have it on there. And customize is just customize the form, which we're going to get into later. And we're going to save and close. Now again, because this is my first estimate, I came up with save and send. But I'll click save and close. Okay, so now when I go into get paid and pay, and I click on estimates, I can see all my estimates. In this case, total of 1. And then one thing you won't see in invoices is the pending status. So pending means you created it, now you're waiting. You're waiting for them to make a decision. All right, and they can decide to accept it or reject it. When I worked for the county, the way they had the purchasing was there was one person in the entire county Office of Education who was the only one who was authorized to do a purchase order. So if any supervisor ever tried to do it on their own, they would get a really annoying phone call about how you're not allowed to do that. So what you could do, as I can't go to Staples and say, all right, I want to buy a photocopier for my office. And they say, okay, we'll send one over. We'll count this as a purchase order. I'd have to say, no, I'm sorry, I can't do that. But can you generate an estimate for me? I will send it to our one person here who can do purchase orders, and then she will generate the purchase order for you. Okay, we can do that. So that's what they would do on their end, create the estimate, send it to me, I send it up the chain of command, she gets approval, then it goes. It's very cumbersome, but it was for security because they didn't want each department being able to just go crazy and spend money on behalf of the county. And then, the Staples supply store could say, hey, look, they said you were buying it, we shipped it to you, we put all that money into it, we want our money. And you're kind of legally obligated to pay us. So that's why they had only one person allowed. It was terrible because if she ever got sick or was off for a day, you're kind of stuck. And the problem was she was kind of territorial too. She knew she had power. She didn't want to share it. So she didn't really train other people. She basically told them what she does. And here, if I'm gone, you can do this. Well, unless they actually do it, they really didn't know. So everybody, well, she'll be back tomorrow. So we'll just wait till tomorrow. So that made it hard. But luckily, we were doing mostly processing paperwork. It didn't really affect us a whole lot. But there we go. All right, so whenever you want to create a new one, you'll see here, there's always this button to create estimate. I'll go ahead and click it just to see it. So you can always use this to generate an estimate. You'll see there's 1002 and do like we just did. Or the other way is I'm going to cancel. Oops. I'm going to go back to customers. And now I'll pick Rob Banks. When I use the pick list on the right-hand side, the action, I've got this option now to create estimates. So you can do it at this level too. If you know the customer's name, start it from the customer level and create estimate. And you'll see what the computer does. It fills in customer information. So just fill that in for you. All right, so let's make another one. This expiration date we'll put at the end of November. Wow. We're almost in November.
Yeah.
It's crazy. Pretty soon it's gonna be 2023. So you'll see, you can pick any day. I could put tomorrow as the expiration date if I felt like it. This is not a rule QuickBooks has to follow. It is more for your customer to know, here's the time limit. All right, so these products, this time, and we'll do something else. Let's do a coupon book. Underneath that, we're going to include a service. So let's give him some bookkeeping tutoring. This time, when we go to quantity, this time, I'll make it 10 hours at $22 an hour. This is not going to be taxable because this is labor. Labor we're going to do for him, Rob, at $22.45. However, the coupon books we are going to make taxable. So in this case, you got one tax and the other one not. The reason the coupon book didn't come up default with a check mark is because we've never taxed it before. But once we do it, from now on, it should remember that that's taxable. Usually when you're doing a service, there's no sales tax. So we'll leave that blank. And then save and close. On our customers area, we now have a light blue box in our status bar at the top here. And it's showing the value of the estimates we wrote. Now we haven't received any of that money, so it's still out there. And you don't owe any sales tax on it. Only when the invoice is created or a sales receipt does the invoice or does the sales tax kick in, and you have to be obligated for that. Now I'm just going to click on this two estimates here. And it shows me each has one open estimate. That is equivalent of over here on the navigator of clicking estimates. If you just want to see estimates, that's the way to look at it. So there's two different ways looking at the same stuff. I want to do it for customers. That's where I usually work with things. It's from the customer level. If I turn it off, clear the filter, I can see all my customers. And again, click it, turn it back on. So just whenever you, like if you come back to customers, just say, oh, where'd they all go? Always look up here for that clear filter. By clicking this blue box, you're putting on a filter to show only estimates. And you'll see it's slightly larger than everything else. So that's telling you it's been clicked. All right, so let's go to Mary. Mary has decided to accept our project. So you'll see here, there's start invoice. When you've got the estimates turned on, that's the only action you can do at this point. If Mary comes in and she says, you know, I talked about that invoice or that estimate, and you know, if you do it, can you do it like by the end of the week? And you say, oh yeah, sure, no problem. Okay, good. Oh, while I'm here, I want to buy some stuff. I want to buy some pens. So to do that, you would not have the estimates turned on. Let's go to Mary. And here I can create an invoice for the pens or a sales receipt for the pens. So once again, when you have the estimates turned on, it's a little bit different than the other things we have here with invoices. See, now it just start invoice or nothing. So let's go ahead and start her invoice. And here's the invoice. And on the right-hand side now, you'll see the estimate. So normally what we do when we create an invoice is we come down here to the products and services and put them in with the numbers that she's buying. However, we already have that information over here on the right side from the estimate. So rather than duplicating that, because I don't know about you, but if I tried, I'd probably type something wrong. I'm just going to click the word add. And it's going to carry all the information over. But first, it's going to ask me a question. How much of the estimate do I want to put on this invoice? For now, keep it simple, the whole thing. Later on, you'll see, like you have options that you could do a percentage. And sometimes you'll do that. They'll say, okay, like, we're doing what? It's $100 or $387, $359, $60, not a big deal. But if it was $10,000, all right, the customer doesn't want to pay you $10,000 up front because they're not sure you're going to be around next month. So what they'll do is they'll say, all right, $5,000 down now and $5,000 when you complete. And you say, okay, fair enough. So there you go. You get the $5,000 now, you can buy the supplies with it. And then once you're done, they're happy, you get the other $5,000. So you can split it here at 50%. Yeah. Or you could do 25, 75, or any percentage you want, or even any dollar amount. We'll get into those. Or you could break out each custom line, meaning the hats, she could pay 50% of the hats, but only 25% of the manuals. But like I said, we're just going to do copy to invoice, total of all estimate lines. And she's going to pay the sales tax. So now is where the liability kicks in. Once I click save and close, I shall now owe the state. How much? $28.32. And save and close. Okay, she's gone from my estimates. I'm going to turn off the filter. Now, once that's created, you'll see here, she's set up to receive payment. Just like we've done invoices before. So once that happens, now it's just like a regular invoice, everything proceeds normally. Before we receive her payment though, let's go back to estimates on the left-hand side here. So in the navigator where you see estimates, you'll see here, it now marks hers as converted, meaning it was accepted and turned into an invoice already. So it means it's basically that one's done. I'm going to go back to customers and let's receive her payment. So I find Mary Johnson. And click where it says receive payment. So we'll make it today. Now, because she's got 30 days, you'll notice the due date says she's got a little more time, but she paid early. So I'm not required by QuickBooks to put a payment method, but I'll go ahead and say where she paid by check with check number 1544. And this time I'm going to have it deposit directly to the advanced checking account. So that one came up automatically. But if it didn't on yours, make sure it says advanced checking account. And if you remember from the beginning class, the other option was we could put it into payments to deposit for later on. So that's on this list here. But that has one more step, so we'll do that later. All right. She's paid, all good. I'm going to save and close. And she's done. So in her case, now her balance is 0. Her estimate's gone from my list. And she's all caught up. So let's go ahead and see that payment. I'm going to click on the gear in the upper right hand corner and go to the chart of accounts. And then I'm going to look at the register for my advanced checking account. So it says view register. Ta-da, there's your payment. So that's basically the way the estimate works. It just basically adds one more step before the invoice. And they can be formal or informal. Usually if you're at this point, you're doing a formal one. Sometimes, somebody come in your shop and say, okay, I want 10 of your books. What's that going to cost me? You say, oh, well, if you're buying 10, I'll give you a discount. So instead of $19.95, let's make them 15 each, right? Okay, $150, great. Can I get that in writing? Sure, let me write you up an estimate. See? That's in writing. So then it becomes formal. At the point where you did the handshake and said 150, they said, fine, that's informal. But at the point they said, can I get that in writing? And a lot of times, if it's somebody who has to report to a boss who actually makes the decision, that's why they need the paperwork, the estimate to go with that. Okay, so we have one more to deal with. I'm going to click on estimates and do it from this area. So you'll see here the status is pending. In his case, Rob Banks, he didn't accept it. If it was somebody else or completely changed his mind, and that can happen. So I'm going to use the edit here, but you can also see on the right-hand side, this is the shortcut to do what we're going to do. You'll see there's convert to invoice. You can mark it as accepted. You can view and edit it, duplicate if you want to make another copy of it, or update status. We're going to update the status by clicking on the pencil. So under the customer name, you'll see there's pending, right? This is the current status. It says estimate status pending. If you got a call and they said, sorry, we're not going with you, it's going to be rejected. There's also closed. The difference is if it expired, right? They never got back to you and you called them and they never answered, whatever. Okay, it expired. That means it's closed. It wasn't officially rejected, but we agreed it was going to expire on the 30th. It's now December. Sorry, closed. So I'm going to click rejected. And by Rob Banks. And I'll put today's date. And again, you don't have to do this. You can just mark it as rejected. But if you talk to the person, it's a good idea to just keep this little history, just in case, he comes, what was expiring on the 30th. So he comes on the phone on the 29th and says, you know what, we're going to go ahead with your estimate number 1002. And you look up here, we talked on the 17th, you rejected it. Oh, did I? Well, yeah. But you know what, we could go ahead and honor it or something like that. You can unreject it. So I'm going to save and close. And you get a decline here. So it's not a bad thing, it happens. I can also, I said update status here. So let's do that. If I want, he changed his mind, he accepted it, I can do that. And I can put his name here and like this. And see, now it's accepted. So that's the other way to do it, is use this shortcut so you don't have to load the whole invoice. And then if you want to create an invoice from here, you can by convert to invoice. So let's go back, let's change it to rejected. So we have one rejected. This was Rob Banks, today's date. One thing you'll notice is when I click the edit button, and it gives me the choice up here, it uses the term rejected. But when I look on the list, it says declined. There's no difference. I don't know why they do that. To me, if they're going to do that, there should be a good reason for it, but there's not. Because the other option would be closed. So just if you see that, that's maybe they thought rejected was too harsh. Hey, it's just business. Okay, so now I go back to my customers because it's rejected or declined, means it's no longer active. So now I see $0 and 0 estimates. So this little box only shows you estimates that are waiting for something, for an answer is basically what it is. Are they taken it or not? And you can have a whole bunch on here and half be rejected and half be accepted. So let's go back and do another estimate. I'll do it from the customer level here. I'll go to Teddy Bear. Now Teddy already owes us some money, but I'm going to go ahead and say, I'll create an estimate for you right now. So from this pick list, I've got create estimate. Okay, so we'll make the expiration date. And I'll make this one November 1st. By the way, when you're selecting dates, if the calendar ends on a day like Sunday, Monday, or Tuesday, it'll show you the remaining dates here. Even though they're grayed out, you can still select them. So it saves you from having to switch to November, then pick the 1st. You can just click here on the 1st. I can go all the way up to the 5th. So just FYI. And then products and services. Let's give them company pen. We'll do 7. And then on the second line, baseball caps, 5. I want to make sure they're taxable, so I'm going to put check marks next to both of them. So I'm teaching QuickBooks that this item is taxable. And there's the sales tax. We're done. Save and close. Okay, so this case, the customer got the estimate, looked at it, and said, you know what? We changed our minds. We now need 10 of each. Can you redo an estimate for that? You have a choice. You can go back and edit this estimate, or instead of editing it, what you can do is update the status and just close it. And I'll put my initials in. Put your initials in. And as of today. Now you see we have one of each. This one's now closed. Okay, so they wanted a new one. There's a couple ways to do this. I can go to the create estimate up here, start from scratch, or because everything's exactly the same except the amounts, I can use this pick list and see there's duplicate. Let's do duplicate. So the last one was estimate number 1003. This one, you'll see in the upper left-hand corner, is 1004, and it gives you a reminder. This is a copy. Once we are done, this part is going to disappear. But it's trying to make sure you don't get confused like this was the old one. Okay. And one other way to tell is you'll see this is already marked as pending. And we know we closed the other one. But we are going to make a change. I said they now want 10 each. So I'm going to change the quantity of pens to 10, baseball caps to 10. Done. See how much faster that goes than starting from scratch. So because this is a revised estimate, I would say something under message displayed on estimate, revise estimate, can I spell it right, of number 1003. Just to note, because when you send this over to Ted, it's going to look a lot like 1003. Just slight little changes. If he's not very organized, he might be looking at the wrong one. He's going to call you up and say, hey, I thought I asked for 10. You say, what invoice number are you looking at? And you say, oh, that's the old one. The revised one should say at the bottom, revised. And he goes, oh, here it is. I'm sorry. And you say, it's okay. I didn't have anything else to do but talk to you about this because you're so disorganized. All right, so we got one pending, one converted, and one closed. Let's go to our customers. And you'll see there's only one current active estimate. It's because the others are either done or closed. So that works? Okay. Well, let's go ahead and say we delivered it. Oh wait, no, there's one more thing we need to do. Let's go back to estimates. This time, I want to update the status and mark accepted. I'll say Ted and then today's date. Okay, so this one is marked now accepted. It's different than converted because we haven't created the invoice yet. And if you look back at customers, this hasn't changed. The estimates are still showing here. And down here, there's still one open invoice, or pardon me, one open estimate. You can start the invoice from here, but this time, just to be different, it doesn't really matter. I'm going to go back to estimates, and you'll see this convert to invoice, which is just basically use this to create an invoice. And again, it's going to say how much is going to go on the invoice. And we're going to say everything that's still on this invoice here goes over. Click on create invoice. The one thing about doing it this way is we didn't have to select the estimate. So that's a little bit shorter. But either way, you get the same results. Basically, our OS 431.50. I'm going to save and close. Now you'll notice that Ted's is now converted. So his is a little different than Mary's. Mary's, she basically accepted and converted at the same time. This one accepted and then theoretically wait a while and then converted. So a lot of times, the reason there's a gap is because once it's accepted, it's going to take you a while to get those products to them. And when you send the products to them is when you do the invoice. Okay. Let's go back to customers. I'm going to turn off my filter to show all my customers, including Ted. And I'm going to receive payment. Now, Ted is one of the names we imported. So Ted owes us from another invoice, but he's only going to pay the estimate one. So down below on the left side, you'll see there's the old one back from January. And then there's this invoice that we did today, 10/17. I'm going to turn off the check mark on the first one. So he's only going to pay for the estimate invoice. Once again, I'm going to send it directly to the checking account. And then I'll put a payment method. We'll say check. Oops. And I'll make a number up, 20088. Save and close. Now I've got 0 estimates, right? Let's go look at the check register. So I'm going to click on the gear, click on chart of accounts. And then view register of the checking account. And there's Ted's payment. And this is when I call them up and say, hey, we got your payment for the estimate. By the way, did you know there's one bill outstanding from January? Maybe we can get that cleared up too, right? As far as estimates, now it's all paid off. Okay. Let's go back to the estimates one more time. We use get paid and pay. Estimates. And on Ted's, I'm going to click the edit button. See on the right hand side now, underneath the dollar amount of the total, one linked invoice. So if you ever want to follow the estimate of when it was paid, you can click that. And it'll show you the invoice here. Because remember, we could have split it. So there could be 2 invoices, there could be 3, there could be 20, depending on how you decided to let them pay you. I'm going to click on the word invoice. And there's the payment, stamped paid on the right-hand side. If you don't believe it or you want to get more details underneath that, it shows you the one payment made. But on the left, it's a backlink. See, it says one linked estimate on the far left-hand side. So if you want to go back, if you're seeing this payment, say, oh, I mean, what was that estimate? There it is. And you can bounce back to it. So now that you're in this longer line of activity, you can go bounce forward and bounce backward through each transaction. And there's the estimate. All right, easy. Yeah, yeah. I mean, if you if it follows what's happening in your company, it makes more sense.
Yeah.
But it's basically call it the baby invoice. You know, it's not a real invoice yet, but it will be one day when it grows up and they accept it.
Yeah.
So I'll close that. And like I said, not every company will use these. Some companies will use them all the time and every time. You know, that construction company, that's essentially what they're doing all the time. They have to give an estimate. So then automobile companies, automotive repair companies, like when you take your car in, they have to give you an estimate, even if it's just $100 to inspect it, and then they'll change the estimate later on. But by state law, they are required to generate some kind of document that says, right now, here's how much the maximum we're going to charge you. If you leave your car here, it won't be more than this. And then you say, okay, fine. And you leave. And then you get the call. Oh, by the way, did you know all your brakes are missing? Well, you need to replace those, and you need a new bumper. And you need this. Well, okay, fine. Then they have to give you a revised estimate. Now it's $10,000. First it was 100. Now it's 10,000. But that's the process they have to use. And like I said, other places may never use an estimate, except maybe once or twice a year for some particular reason. But they are handy because they do keep records of everything that's going on. All right, if there's no other questions, we are done for the evening. And we'll see everybody tomorrow. Yeah, have a good night.
Thank you.
You're welcome.
Have a good day.
Thank you, you too.